Well guys, glad to have you on board again. Today, let's go straight to the essential for the crypto traders. We did manage to close with a bullish engulfing structure on the daily chart, which is pretty great. Didn't manage to trigger a momentum pattern, but that's nothing we care about. I would just say that we need to assess this bullish engulfing structure, which means we might have found an interesting support 2 times. I mean, every time we've been pulled back into that price, has been bullish engulf the day right after. So this is really bullish bias we have right here. But does that mean you need to buy just right now? I'm just going to switch to the intraday charts and give you some technicals. So what we have in here in a 1-hour chart, the one I decided to trade on, didn't manage to give us a signal to trade down the bottom. But the thing is that I want to be clear in here, you know, the indicators are such a complex thing. Meaning that I'm scrolling and searching for hundreds of patterns who have very complicated decision-making process. I mean, like, it's generally between 6 to 10 conditions to trigger one pattern, and there are hundreds of patterns. So the exit pattern are the simplest ones because generally they have less conditions. As for example, the exit pattern, one of the exit pattern, just basically says if the trade line remains below 80, so it remains visible for more than 100 bars, and the current low is higher than the previous low. And we've got a trade line below 40, minus 40, then it triggers the exit pattern when the momentum crosses over minus 80. So normally in here we should have had a momentum exit pattern to trigger, but the thing is that, have a look at the value. When we manage to cross in here, okay, we've been crossing, look at the value that you had in here, all right, it's minus 39.3, which is just 0.7 out of triggering the pattern. So it's approximately, it's nearly nothing out of 100, but it doesn't fit the plan, which means it just doesn't trigger the pattern just because of this. And so we should have had an exit in here, but just because of those 0.7% out of the trade line value, then the pattern doesn't trigger. So that's how it is. I mean, indicators are meant to be that way. They cannot assess shades and gradients. They are just binary choices, and minus 40 isn't minus 39.3. So the thing is that in here, no exit, as normally should have had one. At least we went very close to have one. So you don't bother yourself with that. You know what the indicators are. There are no magical tools that will catch up the bottoms and tops. They're just here to remove the risk, or at least put them into handleable values, and to allow you to trade safely. But at some point, an indicator is not perfect, and just like that is one of the many examples. Normally I've done my job pretty well to make those examples as rare as possible, but still they will happen from time to time, which means even though they should be triggering patterns, they won't, because just one out of many conditions will not be met. Even if the pattern meets 9 of the 10 conditions, and even if the 10th one has been just failing because of less than a 1% chance, less than 1% variation from the trigger level, then still it doesn't trigger, and that's how it is. You won't see anything because you don't know what happens in the code. I do know, and I was surprised we didn't trigger any pattern in here actually. So I got to dig a little deeper to see why it's been failing, and I'm sharing this with you guys today. So what does that basically change in your trading perspective? Absolutely nothing. I give you guys tools and a strategy to limit the risk. And what you've done in here is that the strategy didn't give you a signal, so you shouldn't have taken the trade if you were trading 1-hour chart time frame. On a 2-hour chart, some of you guys have been trading the 2-hour chart. You got the signal, you took the trade. Congratulations. I mean, you probably caught the bottom, and that's great. But those who've been filling the 1 hour scenario, no signal, no trade. I'm sorry to say that, but that's the reality. You don't trade, you don't bend the rules to your convenience. You want to buy, you buy with a signal, no buying entry, because if you cross that line, then God knows how many times you're going to cross that line, and in that perspective, the strategy and the indicators just lose their entire value. They're here to limit the risk, not to tell you, okay, you feel like you have to buy, so go ahead and buy. No, that's exactly what I try to get you guys out of. So, even if it came really close, no signals, and that's how it is. Eventually in the future, I'll just bend my own rules in the indicators to be a little bit more, let's say, I can change the numbers, no problem. I mean, the minus 40 value, I can set that to minus 39, but what's the point? That it's worthless. So it's either I'm going to change the conditions and update the indicators, what I sometimes do, because clearly in here something is wrong, should have triggered a pattern. So I'll see for myself. I'll try to catch up on what we've done in here and why it didn't trigger. Anyway. That's for Ethereums and cryptocurrencies. So if you didn't cut the bottom in here because of no signal in the 1 hour chart time frame, how do you adjust? Now that we've got that bullish reactivation, that we've crossed a resistance, and that we've reversed the trend channel, you wait for a pullback. That's simple as that. Can you buy that? Sorry. So I give you guys indications so you can take more rational decisions. And I know you're still you're still not yet used to those new signals that you have in here. But you'll get to it. It's not complicated. Remember that the sine wave breakout targets, you're going to have many of them, and obviously many of them doesn't even matter. Just a few of them will give you reliable information. Remember that you need to use only those who will happen at interesting levels. Okay, it's just additional information. You don't trade just out of the breakouts. The breakouts give you additional information to highlight a specific area more than another. It's just as simple as that. So what we're having here is just a stop pattern. Remember what that pattern means? Means that if it happens in an area of interest, generally means that some kind of traders will have been stopped out, which means, and to me, what that pattern suggests is that what we've done in here is just basically stop hunting, and fucking both ways is what is probably going to come next. So we're ranging, and we probably have set it two boundaries of that range. Probably the bottom, probably the resistance, and we're going to die in between until we manage to find some strength to break through one of those two boundaries. I still tend to believe that this is going to be to the upside, but who knows? I mean, no certainty is going to be until we at least give some odds. And when I have just two boundaries in a range, I just want to see how the prices will react, but I'll just follow simple rules. Remember the core rules of the strategy. You never ever buy the top of a channel, or the top of the trend channel, which means if you buy anything on top of that line, you just don't follow the strategy. Yes, that line is blue, suggesting we're not trending probably bullish, but you need to wait for prices to go in the lower 50% of that trend channel. That's the minimum to buy. So we can see we've got a Fibonacci support level in here, and that 50% line showing up in there. Is that a price to buy? I think that's the minimum to wait for in order to buy. So I'll personally wait for prices to go in here if I do have a momentum pattern and prices touching the momentum trend line, for example. That could be quite of a nice cluster of information to consider getting myself in with a stop loss below the current low. Obviously, those who've been buying that low are pretty confident right now that they probably bought the bottom of that range. But range still means that we're probably going to go sideways until we find the strength to reverse that to bullish trend. All right, so that's it for cryptocurrencies, but I would like to switch pretty rapidly to talk to you about the stock market instead, as we're going to have a quick look at the intraday charts. So what we have in here, 1 hour chart time frame on the SPX, is we finally managed to break through those highs, but still no candle closing. So it's still hard to figure out what the hell is going to happen, but I still tend to believe that we have some potential to the upside still right now. We have no exploitable bearish signal in here, so it's still no bearish to me, at least nothing I can trade on a 1 hour chart. It's probably on that time frame that I'm going to trigger the trades. So I still have pretty damn confidence that we're going to go higher today no matter what, because we still have potential to do so. All right. So we'll see how it plays out, and generally I teach you guys to have a look first if you want to do intraday trades. So first we got to summarize what's going on in here. You know, I'm searching for bearish entries. This is why you have these yellow color. I want to get into all those assets, buying the VIX, selling all the US and worldwide indices, and selling on the same time Microsoft, Google, Netflix, Amazon, Boeing. I've already took all my profits on Facebook, Nvidia, and Electronic Arts because I don't want to be buyer anymore on that market. I think we're topping up in here, but still, we still don't give the actual bearish signal. Some of the assets have done, so I mean Microsoft and Google has been giving some pretty nasty bearish reactivation signals, but I'll just want to wait for one more session heading into this afternoon session, because I think it will reduce the risk, showing how it's going to be playing today. So in terms of daily chart time frame, what we're having in here is that we're still managed to make a bullish close yesterday. So no matter how it went, it's still closing higher than the open price. Even though if we made a bearish gap, we've been closing with a doji, and that's a positive candle. We're closing inside the previous candles, high to low values, which means it's no trend, it's no bearish trend, even though we've been triggering the bearish reactivation pattern. So I think we're bearish. Yes, I do believe that, and that signal happens near the trend channel, so it really is a double bearish information. But the thing is that I would like to wait for another candle to break through. So either today is going to be a bearish day, and clearly I'm going to follow that trend, or, and I still tend to believe that, we're going to make just one more bullish candle, searching for trading inside 2603 at worst, getting in there, trying to trade a bit in that price area just for a few minutes, even though, and then eventually we retrace. We've got a pretty decent low volume area, but that low volume area is 2607, which is slightly higher than the current prices, and I think we can get ourselves down there. Same thing goes for all indices, so I tend to believe that there is still a tiny but highly and heavily risky buying entry. So I'm not doing this because we're doing intraday trades in that podcast. On Tuesdays we're making intraday trades, so I don't see any intraday trade opportunity at the moment, because basically what we're having here is just pure fucking noise. So it's either you decide to buy that, all right, that's a possibility, you got the signal to buy, but the thing is that to me that signal is pretty damn hard to buy, because if you buy in here to trigger those prices, I mean, where do you put the stop loss? Where do you get out? That doesn't make any sense to me. So I think trading those prices in here could be interesting, could just be a way for, you know, got first trend, pull back into the trend channel, the market's buying, and in that perspective, yes, we're gonna go high this afternoon. But if it fails just in here, if it goes below the context, where do you put the damn stop loss? It's not even a 1-to-1 risk reward ratio. So I would say nothing to do in here, just but waiting to get to the actual selling prices and waiting for a signal in that area. Definitely is what I'm going to do. I'm looking for at least a 15-minute signal, but I'll definitely say that the time frame to trade right now today, because what we're trading in here is no intraday. We're trading swing trade scenario. So I would say, okay, even if we're supposed to do intraday trades in those Tuesdays podcast, then I suggest today you just take some rest, zoom out, and look out for 1 hour charts, which is far from being intraday, simply because what's at play today is on the bigger picture. So when it's that kind of session, you don't want to have a look at a 2-minute short time frame to trigger signals, because it's a much bigger picture that will trigger trades. If we do fail in here, then the targets are pretty much 4 to 5% lower prices. I expect us to go there. So obviously when there's a 4 to 5% move down the road, and it could very well be a 4 to 5% to the upside as well. So when that's the possibility, then you don't want to be trading 2-minute short time frame signals, because you basically going to have more volatility on the intraday probability. I mean, the technicity of those signals will be deteriorated because of higher time frame traders playing in the same time as yours. So conclusion, zoom out today. Don't do intraday on the stock market, because it's barely tradable. I mean, it's a little mess in which probably swing traders will try to to play in the jungle. So you don't want to be someone else's stupid trader. I would like you wait for the decision to be made and take the trades accordingly. Regarding forex market, I took another layer of 25% profits on the USD MXN scenario, as we've been breaking down and closing through that support level I was highlighting. So we got in here 25% off the table, even though we could eventually reach out to the target. I don't really care. I still have 25% of the initial position sizing in the market, but I'm hoping and thinking that we might have support building in here, kind of a retracement. Hard to say where we're going to retrace to, but I still tend to believe we're going to have at some point to build a support. Just like, you know, even if that was really hell of a little support, it was still, we tried to rebound into those prices, and it gave me something to watch out for. So what we need in here is a perspective. So we need the price to do something. And as we're trading support areas, I highly think that we're probably going to have some kind of a rebound. Just trying to build a support and probably just to fuck it up later on. USD CNH still bearish on this one, but profit taken has already been done. So same thing goes in here. AUDNZD is still playing sideways, so nothing to worry about. I'm just waiting for the prices to go either slightly lower or to break up the previous day's highs with a candle close. So I need a bullish engulfing structure closed by a daily candle to assess that we're done with that consolidation. For now, I still don't know, so I don't do anything. Alright, that's pretty much it, and Tesla is reactivating bearish. After that bullish candle, we reopened back to the previous day open and closed right at the low, so it's been a selling only session yesterday, and I very well gonna have a close look at what's gonna happen today, because if we make another down day, then I'll be ready to trigger some breakout trades on Tesla to confirm that bearish reversal, and the next stop is the bottom of that range, in which I don't think we're going to have a single buyer at that time, but more likely just fall apart through that support, and we'll see how it goes. If we can have some bearish news coming from Tesla in the same time, just gonna be a catalyst, and I'd like to see that. I have nothing against Elon Musk, but all I can tell is that this fucking company is way overpriced, and anything bearish in a bearish price context will probably destroy the value. Doesn't mean it's going to die. It's just that we're going to go back to more rational valuations, which pretty much stands there to me. So I'd say $250. God damn it, that's way too much for Tesla. And all the fuckers who've been thinking that we're going to go $500 or $450. I mean, yes, we can go there, but does it really mean anything? I mean, just have a look at that. I mean, Tesla worth more in the stock market has more value than General Motors, I mean, or Ford. What the fuck? It isn't comparable to this. So yes, we're buying future, but we're not buying the future in 30 years. We're buying the futures for tomorrow, for the next quarter, and no matter what the fuck you think, Tesla isn't making money yet. And on the front of that, you've got General Motors, you've got Ford, who actually sell freaking cars, making money, and they less priced in the market. So that doesn't even make sense. And at some point, I still tend to believe that we have quite a lot of valuation to destroy in Tesla, and I very well tend to believe that this is about to happen. So we'll see. I don't know about the timing. All I can tell is that if we have the bears in here after that just 2 waves consolidation, then you know the next wave isn't going to be pretty. Xiaomi as well, I'm going to maintain my trades on this one. We still don't manage to confirm a strong bearish continuation trade. Feels like a bearish exhaustion trade to me. Momentum is trying to get itself out of 80. We've been closing above 80. It wasn't actually that bearish yesterday. It's kind of, we made a doji candle still on top of the previous day's lows, and I will tend to suggest that as long as we can hold on to this, that's a good sign. We need to stay on top of the minus 80, which is the oversold area, because oversold in a bearish perspective means just the bears are in control. And I think right now, if the bulls want to take control over again, then, or again, just take it over once and for all, because it would probably be the first time the bulls will be in control if we manage to build a low in here. So in terms of a range perspective, this is what I teach you guys to do. You know that we don't, okay, so no, we're going to do educational content today. So how do you deal with a valuation that you don't have any ground basis to trade with? Just exactly what we have in here. Clearly not enough history to assess any rational trade. So I'm aware of the risks I'm taking in here at buying Xiaomi, because I don't even know how fucking much this worth. And I have no ground basis to work with. So I'm blindly trading because I have a strong conviction that this thing in the long run is obviously going to pick a lot of growth. But I could be wrong, okay? So I need to assess that. So in a technical perspective, the few informations I have still says, okay, we can go overbought, which means we do have some bulls. No problem with that. We have some bulls trying to get in. At that point, we have more bearish demand than the bullish one. This is why prices are driven downward. But I also see that the bearish momentum is losing strength. We've been pushing hard in here, yes, but far less harder than we've done by then. And what we're searching for in Xiaomi is just one thing. When you're trading early tradings of an asset, you're trying to find the ground basis. You're trying to build the ranges. And then we're going to build the value and the growth period out of those ranges. But first we need a ground basis. And that's partly what we're searching for. So what do you take out of this? You need to play the range strategy anytime you have a chance. So I'm speculating on where to find the bottom of that range. I'm doing this aggressively. Probably I've done that pretty badly so far, because these are the prices I have. Okay, I've been buying in here and in here, so really not good prices. But is it really a bad price? No, I'll say not good. I could have done a better job, but that's no bad. I mean, to me, bad is when you get your prices at the middle part of range, which means if Xiaomi were to go lower than that, okay, I will drag my ranged thing lower. For example, if Xiaomi goes there 6.40 or 6.5, let's say that, then in that perspective, my prices will be far worse than they could than what they look like right now, because this is where the DOM zone will be. Okay, this is where will be the DOM zone, which means I would have bought prices in the DOM zone. all right? That's a risk I'm ready to take. But I think that the current prices, at least the prices we're trading right now, if we manage to build a bottom in here, yes, I could have done a better job, but I'm still near and close to the buying area of the range, which makes it a pretty decent job. This is the only reason why I'm holding Xiaomi for now, because I don't see red flags everywhere. I'm just seeing a market that is trying to recover. I still can't tell if it actually is recovering or not, but it's giving me decent odds. Alright, so I think next goal in here will be to fuck up the bear trend. So it will be going in here, pull back into the blue area, and then crossing it all the way through up. That's exactly what I expect. And in that perspective, we're going to have a range trade. Generally, we're going to sell there in here again, okay, and we'll see. Either we do this and we keep on ranging, okay, or in here we find more bulls. That's a possibility. Okay, that's generally how you do create trend trades. This is here that the difference is made. Generally, the market will do that afterwards. If we hold on to that low, we're going to get to the red area. We're going to sell again because we don't know if we have enough information to cross the highs. This is what we're going to do. We're going to do a 5-wave structure, 2 waves down. We're tracing to the mid part of that range, and then 5 waves up. And we're going to be already in the growth perspective for Xiaomi. That will be the best case scenario to me. We build a range, we pull back in the range, and then we fuck it up to trend. That will be the best case scenario. But doesn't feel like it's the plan to me. As for now, we're just trying to find ground bases. All right. So I'll pretty much tend to suggest that anytime Xiaomi goes there, and there's going to be a partial profit taking to me in here at 61%, that's exactly the same strategy I always follow. Okay, I'm applying the damn range strategy. This is first profit taking and second profit taking. And that's all I'm caring about for Xiaomi. All I'm saying is that I also have a buy and hold trade to go for a longer period time frame. And as I said, probably 3 to 5 years for that trade. And that's a minimum. All right. All right, I think I said it all. So I wish you guys a good day. Be really patient and cautious today. Please don't do short-term trades. Avoid those time frames simply because I'd rather like you to step down a bit, cool down, and watch out for a 1-hour chart instead of getting into 2-minute time frame trades for the reasons I explained to you earlier. When the bigger picture is at play, you want to play that bigger picture and kind of set aside the shorter time frames because this is going to deteriorate the technicity of your indications that you could have in the shorter time frames. All right, bye guys, and trade safe, but definitely search for some bearish trades to do in the US, and no signals, no trade. We don't know for sure that this market is bearish. It's just we're trading near resistance prices and we are probably end of trending to the upside. So we'll see if there are still some bears in there or not.